Hi everyone and welcome back to Next Generation Business School again, where we empower future leaders in business and finance. My name is Amin Shakulu and on this channel we dive deep into accounting principles, tourism accounting, financial management, business strategies and economics insights. So stay tuned and let's unlock top strategies to help you excel in your studies and future career. And don't forget, please, to like, comment and subscribe for more valuable content. Remember, every expert was once a beginner, and with the right knowledge and determination, you can achieve greatness. Your journey to success starts here, so let's get started together. Okay, in continue to our past and previous process of lectures, we want to analyze one more economics scenario case with together. And as you can see in this case, we have Adventure Travel Gear operates a retail store specializing in eco-friendly travel gears and electronics for adventure tourists. And the following are four recent transaction or economic scenarios. In this video, we will get through each of these transactions step by steps and preparing journal entries to record them accurately. This example will help you understand how to handle purchases, sales for cash, sales on accounts, and also payment within the discount period. And by the end, you will see how this transaction affect the financial statements and why accurate record keeping is crucial and very important for business success. So before going into details for each transactions, I want to have a general overview for each transactions. On March 6th, when a purchasing merchandise on credit take place. The transactions number 2 take place on March 9th, when the selling merchandise for cash take place. And the next economic scenarios or transaction take place on March 12th, when the selling merchandise on account take place. And Adventure Travel Group receive an order for 5 more solar power tents. And finally, in economic scenario number 4 and final one, that take place on March 16, when paying for merchandise within the discount take place in this case. So let's look with together how we can behave with recording of this case. Okay, before understand how we can record and operate in this case. In this scenario, Icelandic Code Tours, a company that's similar to Adventure Travel Gears, didn't pay green tech supplies within the discount periods. And as originally agreed upon, instead they paid the full invoice price on April 6. Now we are tasked with preparing journal entries to record this payment under two different scenarios. First, the net cost scenario, and in the net cost scenarios, this means that recording the payment based on the discounted per amounts is considering the discounts that Icelandic tours would have received if they have paid within the discount periods. And in the next scenarios, when we want to use the gross invoice price, and in the gross invoice price, we will record the payment based on the full invoice price without considering any discounts. These journal entries will help the Icelandic tours accurately reflect their financial transaction and liabilities in their accounting records. And let's explore how to handle these journal entries step by step for both scenarios, net cost and gross invoice price scenarios. Okay, let's start with the net cost method for the economic scenario or transaction that take place on March 6. In this transaction, as you can see, Adventure Travel Gears bought 12 solar powers that tends from Eco Shelter Supplies on credit. We know that we should be sensitive about the terms of on credits and also on accounts mode. The invoice price was $300 per unit and totaling $3,600. However, they were offered a discount of 2% if they paid within the 10 days. So as you can see, the discounts amount is 2% within the 10 days. Otherwise, the total amount is due in 30 days. Now, when we're recording this purchase in their accounting records at net cost, Adventure Travel Gears accounts for the discounts that they would receive if they paid within the discount period. So instead of recording the full invoice price that is $3,600, they calculate the net cost by deducting the discounts from the total amounts. And the net cost per unit is calculated as $300 multiple 98%. So the total number of purchase 12 multiple $300 each multiple 98%, where the 98% or 0.98 in this case represent the remaining amount after 2% discounts. Multiplying this net cost per unit by quantity purchased, and in this case equal 12 units, give us $3,528 amount for record. This 3,528 is the total amount that Adventure Travel Gear owes after applying discounts. In fact, this amount 3,528 is the amount after considering the discounts. 12 is the number. $300 is the amount per unit, and 98% is the amounts that we should pay after deducting the discounts. Okay, how we record this amount 3,528? To record this transaction in their books, they need to debit the inventory by 3,528 to recognize the increase in inventory value, because the purchase takes place and increase of inventory take place. Inventory belongs to assets, and increase in assets considered as debits. On the other hand, in the double recording accounting standards, we need to considering the accounts payables, and after inventory, the amount of account payables increase. In fact, the amount of liability is increased, and we consider the liability under the accounts payables by 3,528, increase in liability considered as credit by the 3,528. And this is the procedure for recording in the net cost methods for this transaction on March 6. Okay, in the next economic scenario that take place in March 9. In this economic scenario, Adventure Travel Gear sold sold 4 solar power that they bought in the previous one, tends to groups of eco trees for $500 each and receiving payment in cash. We know that in the merchandising company we should record the selling in 2 levels. One levels for considering the revenue, and the second levels is considering the cost of revenue with using the accounts of cost of goods sold. So to record the sales in their accounting books, Adventure Travel Gear credits the cash account for $2,000 to recognize the inflow of cash from the sales. and simultaneously they debit the sales revenue for the same amount to reflect the revenue generated from the selling the tents. And this ensures that Adventure Travel Gear accurately records the cash received and the corresponding revenue earned from the sales of the tents. Additionally, Adventure Travel Gear need to account for the cost of goods sold, which is expense associated with the inventory items sold. And to calculate the cost of goods sold, they need to use the net cost per unit. And in this case, the net cost per unit equal $300 multiplied by 98%, and the 4 is the amount of selling. And finally, the result of this multiplication equal 1176, which is the total cost of the goods sold. So cost of goods sold is increase, and increase the cost of goods sold consider as debit. Simultaneously, they credit the inventory because we have experienced a decrease in inventory, and we take the goods from the inventory and sell to the final customers. So decrease in inventory considers as a credit by the same amount, 1176. And these procedures ensure that the adventure travel gears accurately reflect the cost of goods sold and maintains accurate inventory records. In the next economic scenario that takes place in March 12, in these transactions, Adventure Travels Gear received an order for 5 solar power tents, which were then sold to local adventure tour company for $500 each in on account mode. Again, we have on credit or on account mode. So we should use account receivable or account payable to record this economic scenario. To record these sales, again, we have a sales take place in the merchandising company, and we should record it under the two levels. One level for record the revenue and one level for record the cost of revenue, and using the cost of good sold to record the cost of revenue. So to record these sales in their accounting books, Adventure Travel Gears debit the accounts receivable for $2,500 to recognize the amount owed by the local adventure tour company for the 5 tents sold. Simultaneously, they credit sales revenue for the same amount to reflect the revenue generated from the sales, and this ensures that adventure travel gears accurately record the sales made on credit and the corresponding revenue earned. So as you can see, the amount of account receivable is increased by 2,500. And this 2,500 is the number of units that sold multiple the price of each unit, $500. That equal $2,500. So account receivable increased by $2,500, the value of selling. Increase in account receivables is increase in assets and considered as a debits. And also sales revenue take place. Revenue increase considered as credit, unlike the costs and expenses. Additionally, Adventure Travel Gear needed to account for cost of goods sold in level 2 of recording for merchandising company sell, which in fact the expense is associated with inventory items sold. To calculate the cost of goods sold, we need to use the net cost per unit, which is 300 multiplied by 98% to reflect the 2% discounts, and multiply this net cost per unit by quantity sold and give us the 1470. So the quantity sold here is 4 multiple the 98%, that is 100% minus 2%, that give us a 98%, and the cost per unit The cost per unit in this case equal $300, and this multiplication give the result of 1,470. So cost of goods sold increase, cost is unlike to the revenue, increase is that considered as a debit, and also we take from the inventory, sell it to the final customer, so decrease in inventory considered as credit by same amount because we are in double entry procedure, 1470. Okay, go to next economic events. On March 16, in these transactions, Adventure Travel Gears pay off their accounts payable to EcoShelter Supplies within the discount periods, and they're taking the advantage of discount terms offered. To record this payment in the accounting books, the Adventure Travel Gears debit the accounts payables for 3,528. So accounts payable is decreased. This means that the total liability decreases, and decreases in liability always considered as debiting or recording. Also, we pay this debit from the cash, so the total amount of the cash is decrease, and decrease in cash or asset account considered by credit. And the total amount that we paid is 3,528. By promptly paying off this account within the discount period, Adventure Travel Gear effectively reduces their liabilities and saves on expenses, and also they demonstrating sound financial management practices, and this transaction ensured that Adventure Travel Gear accurately reflects their financial position and maintains good relationship with their suppliers by adhering to the agreed upon payment terms. Let's look with together to second methods of transactions, gross invoice method. Look at the March 6. In these transactions, Adventure Travel Group purchased a solar power tents from the EcoShelter Supplies at the gross invoice price method, which includes the full amount stated on the invoice without any deductions or transactions. So in gross invoice price method, the full amount is stated in the invoice without any deduction or transactions. There is no discount or deductions in initial recording under the gross invoice price method. And generally we are sad because there is no discounts at the first. To record this purchase in the accounting period, the Adventure Travel Gears debit the inventory account for total amount $3,600 to recognize the increase in their inventory and value due to the acquisitions of solar power tents. Simultaneously, the credit the accounts payable account for the same amounts and representing the liability owed to the eco-shuttle supplies for the purchase made on credits. These transactions demonstrate how adventure travel gears accurately record their inventory acquisitions and liabilities and also ensuring transparency and accountability in their financial reporting. By capturing the gross invoice price, adventure travel gears maintain clarity in their financial records and also they adhere to standard accounting principles. So as you can see here, the inventory is increased by total amount without considering this discount. This discount is not considered because we are using the gross invoice price. In the gross invoice price, there is no discount. And the inventory increased by the total amount 3,600, increase in inventory and increase in assets accounts considered as a debit, and also increase the liability and increase in accounts payable simultaneously considered as a credit by the same amount 3,600. Okay, let's go and see what happened in the next transaction we together. Okay, next economic events. In these transactions, Adventure Travel Girl sell. Please be careful about the sales because selling in the merchandising means that you should record the economic events in two levels. For solar powers tends to group of eco-trees for $500 each and receiving payment in cash. And the cost of each tent is $300. To record the sales in their accounting books, Adventure Travel Gear debits the cash accounts for $2,000. So cash is increased by $2,000, increase in cash or assets considered as a debit. Okay, in continue, they simultaneously credit the sales revenue account for the same amount and recognizing the revenue generated from the sales. So simultaneously, this amount is increased by $2,000. We sold four, each $500. 2,000 debit, 2,000 credit. Debit for cash, credit for sales revenue in level 5. Level 1 to record the revenue from the sales. And in level 2 to record the cost of sales, we need to use these structures. In the level 2 adventure travel gears, debit the cost of goods sold for 1,200 to represent the expense incurred in the selling of 4 tents. So they sold 4 and the cost of each is $300. So 4 multiple 300 equal $1,200. The cost increase, unlike the revenue cost considered as a debit by $1,200. The revenue decrease and decrease in revenue showed on credit part by $1,200. By recording these journal entries, Adventure Travel Gears accurately captures the financial impact of the sales and associated cost of goods sold, and this ensures discrepancy and accountability in their financial reporting, providing valuable insights into their profitability and inventory management. Okay, in next economic scenario on March 12th, Adventure Travel Gears receive an order for 5 solar-powered tents, which are then sold to local adventure tour company for $500. And each on account take place, and the cost of each is $300. Okay, to record these sales in the accounting books, Adventure Travel Gears debit the account receivables because they use the on account modes. And this amount equal to $2,500 and represent the amount of owed by the adventure tours company for the tents. Simultaneously, they need to credit the sales revenue accounts for $2,500. They are recognizing the revenue generated from the sales. So first, account receivable is increased because they sell on account mode, and also revenue increases because they sales on account mode. They order 5, so 5 multiple 500 equal 2,500 that recorded under the debit for account receivable and under the credit for sales revenue. Additionally, in level 2, that is record the cost of revenue. Adventure Travel Gears debit the cost of goods sold account for 1,500, 5 multiple 300. The total amount of cost for each selling, so equal 1500. That reflect the expense incurred in the selling of the 5 tons. And this amount is also calculated by multiplying the cost of goods sold 300 by the numbers, and cost of goods sold increased by 1500, so it's become debits, and inventory has experienced the decrease, and decrease in inventory considered as credit by 1500. By making these journal entries, adventure travel gears accurately records the sale on accounts method and recognizing both the revenue and the associated cost of goods sold. This process ensures proper tracking of accounts receivables and provide insights into the company's financial performance and also inventory management. In the next economic scenarios, adventure travel gears pays off their accounts payables to eco shelters supplies within discount periods, and they take advantage of offer discount. Let's explain to you in the simple language. In the gross invoice price method, first we assume that there is no discounts, so we are sad here. But in the continue, we paid the amount within the discount periods. We are happy right now because we paid within the discount period and we can use the discount. But there is a problems, and the problems is that these two conditions, the initial records and time of payments, are not matched with together. Because this not match condition take place, we need to match them with together in the below procedure. To record these payments in the accounting record, adventure traveler gear debits the account payable for the full invoice amount of $3,600, that reflecting the elimination of the liability owed to eco shelter supplies. Additionally, they debit the discounts gains accounts for $72, that representing the discounts amount receiving by paying within the discount periods. In fact, these $72 shows the amounts that we gained because we paid these amounts during the discount periods. And finally, in the credit sides, adventure travel gears credit the cash accounts for 3,528 because generally we paid from the cash this $3,528, and the amount of cash is decreases. The discounts gains accounts behave look like the revenues and always considered as a credit. So in the continue, this entry for cash accurately reflect the outflow of cash to settle the accounts payables. Because cash decrease, there is some cash outflow take place by 3,528. By making these journal entries again, adventure travel gears properly records their payments that's made within the discount periods and ensuring accurate tracking of accounts payables and recognizing the financial benefits obtained through the discounts. And this helps maintain transparency in their financial reportings and optimize their cash management practices. Okay, let's look to two different scenarios that we want to analyze in section B with togethers. Assume that Iceland EcoTours didn't pay green tech supplies within the discount periods, but instead they paid the full invoice price on April 6 out of the discount periods. Prepare journal entries to record this payment, assuming that the original liability had been recorded at first, net cost, and second, gross invoice price. Let's start with the net cost recording of the above economic scenarios. Okay, in the first method, net cost methods, on April 6, Iceland Ecotures make the payment to Green Tech Supplies after the discount period that has expired. To record this payment, they need to debit the accounts payables for the full amount due, which is 2,450, and reflect the eliminations of liabilities. So accounts payable is decreased by 2,450, that is reflect the liabilities. But they debit the purchase discount loss for $50, that representing the discount that has missed due to the late payment. So this payment take place out of discounts periods. This means that we have the loss in terms of discounts, and whenever we paid out of discounts periods, we need to record the amount that we lost under the name of account purchase discount loss. And the total amount that is paid by cash is 2,500. So this is cash outflow or decrease in cash take place by the total $2,500. In fact, in these conditions, we think positively at the first, and we want to use the discounts and paying the amounts within the discount periods, but what happened is negative finally, and we are sad because we can not use the discounts because we paid out of the discount periods. And again, there is a some not match condition take place, and we need to match them, match these two conditions during the this way. And the key of matching this condition is use of new accounts under the name of purchase account loss. Debit these accounts because it's look like the expense accounts by the total loss, that in this case equal $50. But in the next condition, in the gross invoice price, similarly on April 6, Iceland Ecotours pays the full invoice price to Greentex Supplies after the discount period had expired. To record this payment, we need to debit the accounts payables because we pay or due, that is in this case is $2,500, reflecting the elimination of liability. So decrease in accounts payables reflect the elimination of liabilities by 2,500. Account payable belong to the liabilities, and decreasing liabilities considered as a debit. And also the total amount of cash decreases because we pay this cash for elimination the liabilities, cash outflow take place, decreasing cash take place, and decreasing cash considered as credit by $2,500. In fact, in the second method, what take place is same because we think negatively at the first, and what happened at the end is negative, and we cannot use the discount. But these two conditions are matched with together, and there is a no need for additional account for this purpose. Okay, let's look into the next economic scenario. Assume that adventure travelers did not pay EcoShelter supplies within the discount period, but instead paid the full invoice price on April 6. Please prepare journal entries to record this payment, assuming that the original liability has been recorded at net cost and gross invoice price method. So start with net cost methods. Initially, adventure travelers recorded the purchase of 12 solar power stands at the net cost of 3,528. That is number of the selling multiple to the price for each multiple to the 98% equal 3,528. They debited an inventory account for these amounts that reflecting the addition of inventories, and credited the accounts payable accounts, indicating the liabilities out of shiplet supplies. However, since Adventure Travel Gears missed the discount period, they had to pay the full price of 3,600 to record these payments. And they debited the accounts payables account for the full amount out, and additionally they debit the lost on discounts account for $72 that representing the discount that was missed due to the late payments. On the credit side, they credited the cash accounts because it's reflecting the cash payments and cash outflows. So some loss in discount take place by $72. We think positively at the first because we think that we use this discount 98% and we paid 3,528. But what happened then is something negative because we cannot use this amount and we should pay the full amount, and we lost $72. So total cash is 362. To match these two conditions with together, we need to use the account loss on discount. Okay, let's look to the final economic scenario. In this case, Adventure Travel Gears initially recorded the purchase of the solar power tents at the gross invoice price method, or total amounts of payment without considering any discounts, and the total amount without any discounts is $3,600. They debited the inventory accounts and credit the accounts payables because inventory increased by $3,600. Increase in inventory considered as a debit, and from the other side, simultaneously, account payables also increase. An increase in account payables considered as a credit by total amount because we are in the gross invoice price method. Since Adventure Travel Gears still paid full invoice price 3,600 after discount period, they simply debited the accounts payables, and they also on the credit side credit the cash amount by 3,600 reflecting actual cash, and this entry accurately records the payment made after the discount period. In the gross invoice price method, we think negatively at the first, and what happened to us is the negative also. So there are matching between two sense and emotions, and there is no need to use any additional account and just record it in the following way, because accounts payables decrease, liability eliminate, we consider it as a debit. From the other side, the cash also decrease and consider the decrease in cash as a credit. By making these journal entries, Adventure Travel Group properly records the payment made after the discount period and ensuring accurate tracking of accounts payables and reflecting any missed discounts as applicables. And this helps maintain transparency in their financial reporting and accounting practices. Thank you for your attention, and we will continue our course and analysis in the next chapter with together.